So you just got your year-end 1099. What do you do now? Let's talk about that. First off, I want to talk about what your 1099 NEC is, because it's a brand new form. So you guys used to get what's called a 1099 MISC, 1099 miscellaneous, and your income was reported in box 7. They've just gotten rid of that and replaced box 7 of the 1099 MISC with a 1099 NEC, non-employee compensation. Why? I don't know. It's the IRS. They do what they want. So let's talk about what this form is and why you have it, what it does. So this is the form that reports how much income you made from any given customer, client, or place of, I don't want to say employment because you're not an employee, but somebody who pays you via 1099 to do your contractor work. This form reports how much that specific company or person paid you for the services or goods you provided for them. If you perform services for multiple companies, then guys, you're gonna get multiple forms. You're gonna get a form from every company you do services or you provide goods for. The important thing to note, you guys, is that these 1099s are also filed with the IRS. And so keep in mind that any 1099 you're receiving, the IRS is also getting record of, so they know you made that money. So it's super, super important that you actually file that on your tax return, or you are going to get a nice little love letter from the IRS saying you owe a lot of extra money, penalties, and interest. And we don't want that. So report all your income. So who gets a 1099 NEC? Any person who receives at least $600 by form of check, cash, or ACH, or any other sort of money that's considered cash, is going to receive a 1099 from the person who paid them. Guys, keep in mind that if you're paid via credit card or PayPal, they don't file 1099 NECs. They are required to file a 1099K, but only to people or companies that they pay at least $20,000 to. So that means if you're getting paid via credit card or PayPal and you're not making $20,000, you're not necessarily gonna get a Form 1099 to track your income. So it is important as a business owner, which you now are when you're a 1099 contractor, to be tracking your own income and expenses. You cannot rely on the 1099s to be tracking all the income you're receiving for many reasons. One, the person who paid you might forget to file a 1099 for you. They might not know they're supposed to file a 1099 for you. They may file it for you and it might just not get to you for some reason. And that's the worst because, like I said, the IRS gets copies of this. So if you're relying on the 1099 forms to track your income and you don't get one, you're missing that income. So it's so important that you make sure you're tracking all of your income on your own level by having a separate business bank account that you can then track all of the income that comes in throughout the year. So that's going to include all of your 1099s, but it could also include additional income. Okay, just a quick side note on making sure you track all of your income. So a few easy ways to make sure you're tracking all of your income and all of your expenses, but today we're talking income, is to use an Excel spreadsheet that you can export your bank statement directly to, or you can use an accounting software such as QuickBooks Online Self-Employed, or Xero to track all of your income and expenses. If you want to use QuickBooks Online or QuickBooks Self-Employed, then use my affiliate link in the description box because you're going to get the best price available for your first 12 months. So cannot be beat, I promise. So great, you got your 1099, you know what it is, so now what do you do with it? If you have an accountant, you're going to give them your 1099 or your 1099s along with all of your documents that you're tracking your income and expenses with. Whether it's your Excel spreadsheet or your QuickBooks Online or your QuickBooks Online Self-Employed file, whatever system you're using, you give all that to your accountant along with all your 1099s and they'll know what to do with it. If you don't have an accountant, then you should hire us. Just kidding. We can all do our own tax return if we're just starting out. Totally, totally doable. But what you need to know is what you now have to file as a business owner. So when you file your individual 1040, you now have what's called a Schedule C to file. This is the form where you now record all of your income and your expenses related to your business. So a few extra little bonus tips here, you guys. When you're completing your tax return, you need to make sure that you include all of the quarterly estimated tax payments that you made throughout the year. They go in a separate section of your tax return than your Schedule C does. All right, but if you do not put those in there, you're not gonna get credit for them. You're gonna have this big balance due and you're gonna wonder why. So now you're telling me, wait, I didn't make quarterly estimated payments, so what do I do? Well, if you didn't make quarterly estimated payments, there's a good chance when you're filing your tax return on April 15th that you have a really big balance due. And it's making you panic and it's just giving you anxiety, right? Okay, well, we don't want that to happen again. So in the tax year you're in, you're gonna start making those quarterly estimated payments on time so that this doesn't happen again next year. And then we will figure out with the IRS what to do about your big tax bill on April 15th. Does that make sense? So that April 15th tax bill is also the worst because by then, a lot of times you don't have the money anymore to pay for it because you made it last year and so you spent it last year. So making quarterly estimated payments and avoiding that April 15th tax bill helps you with your cash flow as well. All right. When you wait till April 15th to pay your taxes for the previous year, a lot of times you're going to get hit with some penalties and interest that who wants to pay extra penalties and interest when you don't have to, right? So again, making those quarterly estimated payments are gonna help you avoid those penalties and interest. And like I kind of talked about at the beginning, starting that vicious cycle of always being behind, you just never quite feel like you're on top of it, right? So your April 15th comes, you have a big tax bill, you work to pay it off, you don't make your current year estimated tax payments, and so next April 15th comes along and you're stuck in the same cycle. You're stuck in the same cycle of almost being in arrears, right? You're almost always behind. All right, so at some point you just gotta say, this year I'm doing it right, this year I'm paying my quarterly estimated tax payments, and we'll worry about last year's tax bill, we'll take care of it. And there's different ways you can take care of it, whole nother video. So if you're in this cycle or this cycle is kind of, the thought of this cycle is making you panicky, this is one of many reasons why having a good accountant on your side is just, it's a must. That's coming from me, the business owner, not me, the accountant. So find a good accountant out there that can help you get your taxes under control, make those quarterly estimated tax payments so you're not in this cycle of being behind. If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly, highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.